just wanted to have a few charts today and make it very simple for ourselves. As far as the key issue in front of us right now, tomorrow morning's supply-demand report, of course, being one big deal. For corn, we will see a drop in ending stocks from 902 last month. The trade is expecting actually a pretty good decline, over 62 million bushels is their number. We're expecting about a 20 million drop, but either way, it doesn't matter. We're still going to see lower ending stocks than the expectation. The main driver for that lower number is going to be lower yield. As far as beans, same story, should be supportive for beans as well. Keep in mind, this drop from 265 down to this 230 or 240 number is going to be made on demand. So USDA may, in fact, the average trade gets has a slight increase in yield, but that's going to be more than offset by this very good demand. The fact that we're selling these beans to China through January through March, in fact, for delivery, when typically that's a Brazilian-run export market. That's simply a real good factor for us. Numbers for wheat, they will be a little disappointing. We are going to see a jump in ending stocks. As I said before, though, that's going to be mainly demand-driven. We're having some problems with this export market on the wheat side. But overall, though, we still expect corn to be the main driver of wheat prices right now. As far as price projections, still saying $6.50 for the corn. That's not changed. For soybeans, January at $13, and that's just very close to here. Maybe we can get that target done here tomorrow. So nothing changed as far as price projections on that end. I did want to point out there's some more talk now starting to pick up from the general trade on acreage for 2011. I want to point out exactly where we get our numbers from. Here's the top three crops, so corn, soybeans, and wheat. And keep in mind, obviously, we've seen the trade kind of push into these new into these main three crops here in the past few years. We're expecting right now, these are working assumptions. We're not, we haven't finalized our 2011 numbers yet. But corn up about 2 million. Beans we look for unchanged. So we're going to have a higher winter wheat planting here, up 4 million acres. Most of those will be dual opportunity, means winter wheat plus double cropped into beans. They're going to drop for spring wheat. This is, but a net change, unchanged for beans. What's interesting here is I've also included cotton, up 1.5. So we actually have a dramatic increase in acreage coming here. And where do we get that from? Keep in mind, we don't plant just 3 crops. We actually plant 28 here in the U.S. And let's look at the other 25. Here's where a lot of this acreage has been going, has been leaving. So while we're seeing a big jump in terms of the top 3, big decline in the remaining 28. And these are where all these are laying out here. So we are going to see a net increase in acreage. It's going to be about 5 million acres once you add up all the crops together here. So that's where we're kind of coming from here. Last thing I just wanted to point out in terms of just something kind of neat to look at, we talked about this winter wheat, this crop condition issue here. The fact that winter wheat's got the worst crop condition since fall of 1991. And went ahead and pulled up the 1992 harvest contract for winter wheat, so July KC contract in this case. So the last time winter wheat conditions started out this poorly, in fact, they actually ended the year very close to where they started out. I want to look at the price action, November, December. Interesting to see that this market was in a slow uptrend. It got going really good here in January. I'm not sure if this is mainly due to a report or some type of revision on something like that, but just want to point out that the general trend for winter wheat during that dangerous time frame as far as yield goes was certainly straight up here for the next 2 or 3 months. So we'll get to more details on that later on here.